Hi, in this video, we're gonna be presenting about lemonade and kit pushcart, which is the business that we chose for our group project for the subject Acc407, and this video is prepared for Puan Norliza. Our group consists of 6 members, which is from CDCS 266, which are Irdina Najwa, Najah Najiha, Nur Shafiqah, Nur Rashida, Balkis, and Nur Afrina. These are all the topics that we're going to be discussing in this video. First, business background. Second, business characteristics. Third, classification of business items. Fourth, recording process. And fifth, strengths and weaknesses. I'm going to talk about the business background. The business we chose are called as Lemonade and Cake Pushcart, which is a type of F&B, food and beverage business, and they operate at the pushcart located in College Mawar, UiTM Shah Alam. The business operates on a part-time basis and is run by a team of 7 employees, which is students from College Mawar. The business activity of Lemonade and Cake Pushcart involves selling chocolate moist cake and lemonade. The products are sourced from the owner, and the business earns revenue by selling them to customers, which are college students from College Mawar itself or other colleges as well. Equipment used includes a trolley and drink or ice containers, which are essential for storing and displaying products. With minimal expenses limited to a sales permit, this small-scale enterprise efficiently tracks sales and inventory through meticulous record keeping. The business focus is on offering convenient, ready-to-enjoy cakes and refreshing drinks to college students, making it a straightforward and customer-focused operation.
Next, we will talk about business characteristics. Since this business operated as sole proprietorship, so the capital was 100% contributed by the owner. And this business owned by one person only, and the owner handled everything from supplies the inventory to control the daily operations to make sure the business is under control. For the management and control, this business was managed by the owner, and they have 7 employees, which is students from College Mawar itself. For the profit or loss, the profits earned from the pushcart belong solely to the owner, who also need to be fully responsible for any losses incurred. Since it is a sole proprietorship business, so there is no separation between the business and the owner, meaning that any financial success or setback directly will impact the owner. Next is characteristic of books and account. So for this business, which is pushcart business, they always track their income and expense to make sure they have a smooth financial management. And lastly is a liability. So this business is operated under unlimited liability, which means the owner is personally accountable for all financial obligations.
Now, I will go through the classification of business items, which are current assets, non-current assets, current liabilities, and capital structure. Let's take a closer look. For current assets consist of resources that are either cash or expected to be used up or converted into cash within a year. These include cash on hand, business bank accounts, and inventory. The inventory is divided into raw materials and finished goods. The raw materials we use are lemons, sugar, ice, water, carbonated water for sparkling lemonade, flour, cocoa powder, baking powder, eggs, vanilla essence, milk, baking soda, and vegetable oil. These ingredients are essential for making the products. The finished goods, which are ready for sale, include chocolate cake and iced lemonade. For non-current assets, which are the long-term investment that support our operations, these include essential equipment like oven for baking and refrigerator for storing ingredients. These assets ensure we can produce high-quality products while maintaining freshness and efficiency. On the liability side, the business have accrued expenses such as wages for all employees. These are short-term obligations that the business manage carefully to ensure our daily operations run smoothly. Finally, let's talk about the capital. The business started with an initial investment of 5,000 ringgit Malaysia, which has been used to establish and grow the business. However, some goods are occasionally taken for personal use, known as drawings, which reduce the total capital available. Laminate and cake pushcart business operates with a well-structured financial foundation. The current and non-current assets ensure smooth production and operations, while the liabilities and capital reflect responsible financial management.
The cake pushcart business incurs a variety of expenses to ensure smooth operations and deliver high-quality products to its customers. The first major category of expenses is the cost of goods sold, COGS, which covers the purchases of ingredients and supplies necessary for the production of cakes and lemonade. This includes essential raw materials such as flour, sugar, eggs, lemons, butter, and other ingredients that are the foundation of their offerings. Additionally, the business must purchase packaging materials such as boxes, bags, and drink cups to properly present and serve their products to customers. Beyond COGS, the business also faces several ongoing operating expenses. One of the most significant of these is the sales permit fee paid to College Mawar, which grants them the legal right to sell their products on the campus premises. Without this permit, the pushcart would be unable to operate, making it a crucial part of the business legal and logistical framework. Furthermore, the business incurs regular utility costs for water and electricity, both of which are essential for the preparation of cakes and lemonade, as well as for the maintaining the cleanliness and hygiene of the pushcart. Another important category of expenses is labor costs, which are necessary to ensure the business runs smoothly. This includes the wages and salaries of the 7 employees who are responsible for preparing the cakes, making the lemonade, and serving customers. Their contributions are vital to the business ability to meet customers' demand and maintain high standards of service and quality. Additionally, the business must budget for maintenance expenses, which cover the repair and upkeep of essential equipment such as the trolley, ovens, and drink containers. Regular maintenance ensures that all equipment stays in working order, helping to prevent downtime and allowing the business to maintain consistent service. On the revenue side, the business generates income primarily through the sale of these cakes, including its popular chocolate moist cake and refreshing lemonade drinks. These products are carefully crafted to appeal to a wide range of customers, contributing to the overall success and profitability of the business. The sales income allows the cake pushcart business to cover its ongoing expenses while also providing the means to reinvest in the business. Reinvestment in quality ingredients, expanding product offerings, and improving customer service are just a few of the ways the business ensures growth and continues to meet customer expectations. The income also supports the hiring of additional staff, the introduction of new products, and the
potential expansion to new locations. Ultimately, the careful and strategic management of both expenses and revenues is crucial for the long-term sustainability and success of the cake pushcart business, allowing it to thrive in a competitive market while continuously enhancing its offering and operational efficiency. Through this balance, the business aims to remain a beloved and reliable source of delicious treats for its customers, ensuring its continued growth and profitability.
As for the recording process, the business owner takes a hands-on approach to manage and record the financial transactions for both lemonade pushcart sales and the variety of cakes. Sales are tracked daily, with each transaction recorded manually in a sales ledger, which serves as a basic form of a sales journal. This allows the owner to document cash inflows from customers and categorize sales by product, whether it is lemonade or the cakes. By doing so, the owner can monitor which products are generating the most revenue, providing insights into customer preferences and helping to plan for future stock requirements. In addition to the sales tracking, the owner also manages inventory through a simple but effective system. Each time ingredients or supplies are purchased, it is logged as part of the cost of goods sold. These ingredients are essential to the production process and are key in calculating the gross profit margin. Inventory is updated regularly and the owner keeps a close watch on stock levels to ensure that there are enough supplies to meet demand without overpurchasing, which will help maintain a healthy inventory turnover ratio. One of the most important aspects of this process is the collection and preservation of receipts. The owner saves receipts from all purchases of ingredients and supplies, which are critical for both expense tracking and tax purposes. These receipts are recorded as business expenses in the owner's financial records. Similarly, sales receipts are kept as proof of revenue, helping to ensure that the financial records are accurate and up to date. This is essential not only for daily operations but also for generating financial statements like the income statement and balance sheet. The owner handles all aspects of the financial recording keeping personally. This involves in reconciling all receipts and ensuring that every sale and purchase is recorded accurately. At the end of each week or month, the owner reviews the records to generate key financial documents such as the income statement, which shows the total revenue, cost of goods sold, and the resulting gross and net profit. The balance sheet is also updated to reflect the business assets, which include the inventory on hand and any liabilities such as outstanding bills for supplies. By doing all of this, the owner can closely monitor the financial health of the business. Keeping an accurate record of expenses like supplies and ingredients helps in budgeting and cost control, ensuring that the business remains profitable. Furthermore, tracking sales trends allows the owner to make informed decisions on which products to promote, which ingredients to purchase more, and whether any adjustments need to be made in pricing or supply chain management. The process might seem simple, but it is crucial for maintaining the business financial stability. By handling the finances directly, the owner ensures that they will have a clear understanding of the business financial position at all times, which is important for small businesses where cash flows can be tight. The owner's record-keeping process is also critical when it comes to filing taxes, as all expenses, revenues, and profits must be accurately reported to avoid any potential issues. This hands-on approach gives the owner control over the financial operations, ensuring transparency and accuracy in all transactions.
Every business has their own strengths and weaknesses. This business strength is time saving. This is because in this business, they take on the role of a middleman as they are sourcing products from a variety of suppliers and also creating their own product. This makes the time taken to create those products to be cut in half, thus allowing the business to save some time. This also reduces the need for the business to invest a lot of time, money, and resources into manufacturing their own product. It also reduces the time to bring products into market as they receive the product ready to be sold. Other than that, this business strength is also being lack of debt. This business eliminates the need for some expenses such as renting physical spaces like storefronts or warehouse, and only focuses on a more cost-effective approach by only needing the owner to pay for a sales permit. This can lead to business avoiding regular rent payment, which can consume a large portion of its budget. They also do not need to pay for property maintenance, which can add additional expenses. Just like strength, this business also has their own weaknesses. One of these business weaknesses is being dependent on service provider. This sentence means that the business relies on a third-party supplier or provider to deliver goods necessary for their operations. This relationship often means that the business does not produce everything in-house and instead depends on external suppliers to meet its product or service requirements. If the supplier experiences disruptions such as delays, quality issues, or price increases, it can significantly impact the business's ability to deliver products to customers on time or maintain profit margins. Other than that, this business weakness is limited product range. This is because the business only provides a type of dessert and a type of drink, which makes it highly focused and specialized. This could lead to limiting customer choices instead of broadening customer base. Some customers with specific tastes might be discouraged if the products offering do not meet their needs. The business may face the challenge of attracting customers who prefer variety or those who are looking for more options. They might struggle to retain customers or even expand its own customer base.